Hi, everybody. My name is Alexandre Kech. I'm the CEO of GLEIF, and I'm today with Avanee Gokhale, Head of Industry Insights and Global Head of Trade at SWIFT, but also Vice Chair of the ICC DSI Industry Advisory Board. As a global trade transition from paper-based processes to fully digital ecosystems, the challenge is no longer just digitalization, but achieving interoperability and trust at scale. So with Avanee today, we will examine how fragmented systems, inconsistent standards adoption, and weak identity frameworks continue to be a constraint and slowing progress, and how global coordination, trusted organizational identity, and interoperable data model can unlock the next phase of digital trade. So, Avanee, thank you for being with us today. Can you introduce yourself a bit further beyond what I just said, and before we go into the questions?
Thank you, Alex, and thank you, GLEIF, for having me. I'm super happy to be here today. So, as you rightly said, I wear two hats at SWIFT. One is to lead the industry insights, which is really to understand the trends in the industry, what the player landscape looks like, and what that really means from an industry standpoint. And the second one is more on leading the engagement and strategy for trade. So everything around how do we standardize, how do we better do work on the interoperability, and finally, what does our data strategy look like when it comes to trade and movement of trade transactions, but also data and value.
Excellent. And we both are also active in the ICC DSI, and it's always a pleasure to meet in that forum as well. So let's set the scene for a minute or two. So looking at digitalization of trade and interoperability. So the ICC DSI paper that was published, I believe, last year sets out a roadmap for interoperability and trust in global trade. So can you walk us through the headlines findings? What does that paper say about where the gaps are today and what next needs to be done?
Sure, Alex. So at a very high level, the paper addresses the question of, can we make digitized trade work across the ecosystem? And it's well noted that there is progress which has been made when it comes to legal reforms, standards, and industry pilots. But with all these initiatives, they're all advancing in parallel rather than in concert. So the paper explicitly mentions two things. The first one is that the foundations for shared semantics and common language are something that need to be worked on, because without that, digitization of documents or even the extracted PDFs, they're just going to create silos. Because what's going to happen is every platform is going to map fields to its own schema, and they won't be talking to each other. So the first one is to have shared semantics. And then the second one, which is super important, is portable trust at scale. So this is where the ecosystem parties can actually verify identity, who did what and when, across which platforms. And this is without bilaterally repeating this due diligence again and again. So this is what the paper talks about. And it also maps out a pragmatic roadmap when it comes to how do we align these semantics? How do we embed this portable trust via the verify once, use many model? And then finally, it talks about how do we pilot, measure, and scale through that interoperability layer, which can then help connect the ecosystem. So I think if I had to summarize the paper, the key message that we are trying to put across is that there are many tools and incentives which exist right now. But what's really missing is that coordinated execution across the entire ecosystem.
Yeah, makes sense. And it has been a priority for years, digitalization of trades. And though, despite that, the adoption remains quite uneven. So I think one of the arguments of the paper is also that it's not only about digitization, but also about interoperability. And you touched upon that in a second ago. But when does that shift in framing in terms of moving from digitization to interoperability means practically? And where is fragmentation most visible and most damaging from your perspective?
So look, for years, the industry has focused on the whole digitization of documents. But today, the bigger challenge, in my opinion, is enabling trusted data to move seamlessly across organizations, platforms, and jurisdictions. And as I spoke earlier, a PDF may replace paper. But again, if someone is going to rekey that data manually into another system, perhaps there is a digital format, but you're not really digitizing the process. You're just creating more digital friction. So the real value will come when that data becomes machine readable, when it's verifiable and reusable across the entire trade ecosystem. And even from Swift's perspective, fragmentation is what we see from our vantage point is that fragmentation is one of the biggest barriers from an efficiency standpoint. And we see that from a viewpoint of different standards, proprietary platforms, inconsistent identities, digital identity frameworks. And increasingly, we are seeing it in the forms of value. So from traditional bank money to tokenized assets and digital currency, we are seeing it all. So when we look at the future, for what we see is that there's not going to be one single global platform. It's going to be a network of networks where there'll be multiple platforms, multiple technologies, many different business models. They will all coexist. And what will be more important is for customers to have that optionality. The experience is important, but that optionality is equally important. And that's where we need to address that challenge. But how do we then interoperate across this through common standards, shared trusted mechanisms, and consistent digital identities? So this is precisely where Swift comes in as well, because what we do is by connecting the traditional rails with DeFi and so TradFi and DeFi, we are ensuring that the participants can interact seamlessly, but they don't have to abandon the system that they currently use right now. And that's exactly why Swift is building a shared blockchain ledger, which will allow banks to interoperate and offer 24/7 payments outcomes while they continue to rely on existing settlement mechanisms, while retaining full independence in how they manage their own client relationships, their own deposits, and their own commercial decisions. So, once again, to summarize this, interoperability of the future is going to be ultimately about preserving choice and eliminating friction.
So let's deep dive a little bit into the concept of interoperability, because sometimes it's very abstract. So let's take an example of a letter of credit, or an electronic bill of lading that needs to cross multiple platforms, banks, and customer authorities. So how does interoperability look like in such a context, in terms of from A to B, what needs to be interoperable, what doesn't need to be interoperable, and so on and so forth?
So the simplest way to think about this is, how do different systems keep or retain their own technology, but yet share a common language and a common way of establishing trust? So for me, that's the crux of it. And to your example of, say, a EBL or a letter of credit, this information moves through multiple platforms. So you have the carrier, shipper, freight forwarder, customs, FIs, and each have their own systems and own formats. So in an ideal interoperable environment, how we would see it as the data would remain at the source, but authorized parties could access, verify, and use it without redoing the KYC or rechecking the trusted mechanism behind it. And it would be important for the data to move seamlessly, where digital identities, signatures, timestamps can actually move seamlessly and provide assurance about who has issued the information, when it was issued, and whether it has been altered. And what this will result in is that there will be fewer manual checks, fewer reconciliation, faster processing, and just greater confidence in the whole ecosystem across the participants. And especially as we move towards an era and a future where it's all going to be blockchain at scale, I will be personally very interested to see how we can evolve many of these trade use cases into what I believe is the future.
That makes a lot of sense. And as we know, there are as many blockchains as people on the planet nowadays. So interoperability will be quite critical to enable that portability of data, portability of digital assets, and portability of digital identity, to ensure that you have that trust layer that everybody can trust and use, actually. Going into the identity part, so we often say identity is the missing layer, because today platforms have their own identity mechanism, blockchains as well. So why is identity the bottleneck? So standards are moving fast, but identity seems to be the missing bit, the missing puzzle piece, as I often say in conferences, for that interoperability to take place. In your view, why is identity a critical missing layer today, and why has it not kept pace with the digitization already underway?
So the challenge with identity is that many of the identity schemes were designed for domestic or closed ecosystems. So when you look at national identities, IDs, ECLs, platform-specific credentials, you often see that they work really well in their own environment, but they're just not easily recognized across borders or across different platforms without bespoke bilateral arrangements. So that's where we see that crucial breakdown between that seamless movement of identity. So as data becomes increasingly digital and data-driven, trust can no longer sit outside the transaction. So identity would need to travel with the data itself, because without portable, verifiable organizational identity, digital trade just won't be able to scale globally. And in many ways, identity is to digital trade what container shipping is to physical trade in a way. And it's that standard layer that we need to make sure has those right elements and components in it while moving across networks, across borders, which will allow the whole trade transaction to move efficiently and without friction.
Yeah, I agree 100%. Obviously, that this is our world identity, and SWIFT also with the BIC. So we have a few international standards around identification. So the BIC, which is the Business Identifier Code that SWIFT uses and the industry uses for identification of banks and branches of banks in payments and other processes, among other things. And then we have the LEI, which is really at the legal entity level, where really you can identify who is accountable in a transaction. At the end of the day, people, legal entities are the ones that are doing transactions, that are accountable for transactions, that will be sued if something goes wrong in a trade or in a financial transaction. So where do you see tools like the legal entity identifier and now the verifiable legal entity identifier as a potential component of the solution, or even the foundation that we need to build on?
So I'm preaching to the choir. Yeah, you obviously know this far more than I do. But
it's always better when someone else is saying me.
So I would say that LEI and vLEI, they are becoming foundational infrastructure rather than simple, just a component of the solution. And I know historically, both LEI, vLEI have been viewed primarily as regulatory identifiers, but it's far more than that. And some of this has been touched upon in the current ICC DSI report that we touched upon, but also the recently published BIS report, or the Project Aperta report. So there is a broader role that LEIs are increasingly playing in terms of routing of identifiers for digital commerce. And in fact, this is also reflected in FSB. So when FSB has been talking about its work under G20 cross-border payments roadmap, digital identity is one important part that they always address, which is almost thought of as a critical infrastructure, because strong digital identity can actually improve customer due diligence, reduce compliance, friction, strengthen fraud controls, and enable more trusted data to move across the border. So I guess as we look ahead, and once again, where the industry is moving towards programmable transactions, tokenized assets, AI-driven commerce, especially in agentic AI, it's going to be not just KYC, but also KYA, know your agents, and where that whole element of identity again plays a super important role. and where machines and not just people and organizations, but even machines and agents will need to verify who the counterparty is. Do they trust the counterparty, and can it scale in real time? So it's just going to be more and more critical as part of that foundational trust layer infrastructure as we look at the future. Um, so when I think about the question no longer is whether digital identity is needed. The real question is whether we can build truly interoperable digital ecosystems without that globally recognized trust layer. And obviously, I mean, the answer to that is no. So it is very, very critical.
Yes, especially also that the verifiable legal entity identifier not only enables companies to prove who they are, but also any acting agent on their behalf. So, for example, individuals, AI agents in the future, machines, to ensure that you have that clear link between something or someone that is acting on behalf of a company and that company, which is quite essential. Going down to the role of SWIFT in all this, and as people will know, most in our audience, I've been working at SWIFT for 18 years, so I'm disclaiming here, especially in the world in the role of in the department of standards creation, so ISO 20022, ISO 15022, and then the very standards that SWIFT is the registration authority of. So let's look at the role of SWIFT as a coordinating role, which has been the case for many years. So what role does SWIFT can play or is playing in enabling this interoperability layer across financial institutions, trade networks, and what does coordinations really look like in practice?
So before I answer that question, I just want to step back, because what we are seeing from our perspective is this whole new breed of players which are reshaping the ecosystem. And these are nimble, technology-driven innovators. They are emerging digital networks, private and public consortiums, closed-loop players. So, and all these are actually challenging the traditional models, not just in trade, but across trade, payments, securities, FX, digital assets. And the focus is on interoperability, speed, and the end-to-end digital experience. So keeping in mind the fragmentation, which is one of the biggest risks that we see with these siloed platforms and disconnected ledgers, we are working very closely with our community to drive standardized messages in terms of MT messages for trade, APIs for trade, which are actually the APIs for trade are ISO compatible, but the whole migration of ISO payments from a payment security FX perspective as well. And our aim is to provide that common language which can seamlessly interconnect the various networks and can do the same with the new forms of value as well. And at Cybos last year, we did announce two big initiatives that we are working on. One is the ledger, which I touched upon earlier, but the second is also a scheme which will ensure that we can enable fast, predictable, transparent payments and really improve the experience for the customers and the clients. So at the end of it, we are doing this so that we can ensure that we are building that foundation of trust, enable operational excellence, while enabling instant and frictionless transactions across the ecosystem.
Well, standards is a big component of what you just described because they work across platforms, across SWIFT and other new ways of exchanging data and exchanging value. So ISO 20022 and MT are example of that, and LEI is an example of that at identity level. But standards are not, unfortunately, sufficient or enough. It's not. Standards are only useful when they are used effectively across all those ecosystems. So what does it requires coordination, in other words? So what does effective coordination actually require across such complex ecosystems of banks, regulators, logistic providers, technology platforms, all that you've mentioned before?
So there are three things. The first one is a common understanding of these critical trade events and what data actually needs to flow across the ecosystem. So identifying that data. So that's the first thing. The second thing is interoperability, but by design. So as you rightly said, it's just not enough for us to publish standards, but the participants in that ecosystem need to implement these standards. They need to do the mapping of the schema and the standards. And they need to adopt those common rules, which will make this integration between various parties predictable, repeatable, and easy. And the third and I cannot highlight how important this is, which is the trust. So it's not just the trust, but the trust that travels. So if, as an example, if one platform has already verified an organization, validated a credential, or assessed a service provider, then there should be a way for that trust to travel across the ecosystem and be reusable across the ecosystem instead of being recreated every time. So interoperability is not just about creating another standard or another shared operating model or protocol. The winners ultimately are not going to be those who have the most volume of users, but those ecosystems which is going to make it easiest for participants to connect and move trust and transact across the networks.
So common frameworks, common standards, common adoption, or at least a shared adoption or coordinated adoption of standards. So how do we align incentives to make that happen? So how do we align incentives between public and private sectors, stakeholders, to drive adoption of common framework? That's probably where the challenge is. And where do you see the biggest resistance today?
There has to be an alignment of incentives between public and policymakers, regulators, and practitioners on the ground, or even the private sector stakeholders. They have to, you can't have one without the other. And that's for sure. We see that in trade, we see that in payments. So that has to go in tandem. The good news, though, is that the economics of interoperability are pretty compelling. Everyone understands the benefits in terms of processing speed, operational cost, transparency, financing, better access to financing. So they understand it. But where I see the resistance come from is three areas. One is where platforms still continue to be closed. And a lot of times they view this more as a competitive threat rather than embracing it. So that's the first one. Second is when it comes to trust, there is still a little bit of, I would say, they're not sure about this whole moving of trust across the networks. There's a little bit of apprehension around that. Um, and the third one is the fact that some of the SMEs, in fact, a large number of SMEs and the emerging markets, they just don't have the resources to invest in this. So that again becomes a big bottleneck. We do see the larger corporates manage this complexity well. Uh, they are doing the right things as much as they can, but then an ecosystem has a combination of large corporates, SMEs, and that's where I think really breaks down.
Now, it makes a lot of sense. And at GLEIF, we're very conscious of that and trying to find solutions to, for example, enable identity at MSME level as easy as we can. And that's clearly efforts we will continue to do. Interestingly, in the context of coordination between public and private sector, I think SWIFT and GLEIF are very similar in the fact that we, of course, GLEIF is composed of a public and private sector. It is a public and private sector initiative with clearly a regulatory oversight committee of public sector agencies that helps us with the role of the LEI in regulations, but not only, and then the private sector. And at SWIFT, you also have similar initiatives. I like the Cybos Policy Forum, which is again happening this year. It's really the right opportunity for public and private sector to talk together and enable what we've been talking about for now about 30 minutes. I'm going to deep dive a little bit about on identity automation and the road ahead. So we talked about identity as an enabler of automation and trust. So automation is possible, clearly, and that's the objective, but only if trust is embedded from the start. So how does trust organizational identity enable automation in trade processes, and what does that unlock that is not possible today or is not even happening today?
So identity is that bridge between digitization and automation. And that's the area, as we look ahead, that we need to focus on the most to move from where we are to where we should be. As an example, structured data, for example, tells a system what is happening, but identity tells it who is acting and whether that action can be trusted. And without this trusted identity, every process is still going to require manual intervention, a validation, and reconciliation. But with the identity element added to it, it's just going to make it easier for systems to make this decision with a lot more confidence. And that's where, again, concepts or like a LEI or a vLEI become so popular, because they create this whole globally portable identity layer, which allows the participants to start verifying counterparties and validate credentials far more easily. Um, and so when we look at the destination, it's not just about paperless trade, because when we talk about trade, when we talk about digitization and digital trade, we always talk about paperless trade. But it's really about that trusted, data-driven trade, where goods and information and money continue to move in sync.
Absolutely. And just an example of how trust is important in automation. I used to work before Swift at a bank where we would receive instructions from customers and would STP, so straight through process them or not, depending on the source of that instruction. Everything which was coming from Swift, for example, would be automatically trusted because Swift was the trust layer in bringing that transaction to the bank, and the bank being able to process that transaction and send it to the next in the chain. We didn't have to recheck that it was coming from the right entity. And that's so important for automation. On the other hand, transactions coming by faxes, for example, or other means at the time would need to be double checked. We would need to do a callback to the sender of the fax to make sure it was effectively sent by that person and not someone pretending to be that institution or that client. So trust is such an important component of automation, and I think it's always it's underestimated. And I think your response is great to highlight that it's so important. And let's say
the faster you can trust an instruction which is coming in, it just unlocks liquidity in a faster way. Your working capital becomes more efficient. It also then starts bridging that gap between the available financing and the timeliness of that financing. So it just has a cascading effect, which we often underestimate.
Absolutely, and when we look at the LEI initial use case around regulatory reporting as well, regulators trust, because they build the LEI system, trust the LEI and do not necessarily require additional corporate information when you report to them with the LEI, because they know that it's a trusted identifier. So trust is such an important component of automation, and I don't think we highlight this enough. So if you could accelerate one global shift, a policy, a standards, or an infrastructure change, what would it be to enable what we've been talking about?
Yeah. So I've thought about this question, and I went in circles whether it would be policy, standard, infrastructure, and I would say I can't choose one. So because the reality is they all go in tandem. You need the policy changes to provide that regulatory foundation. And I know there's some great work being done in the industry with Melita. So that foundation has to be there. You need standards, you need the common language and the semantics to prevent the silos. And Swift is at the forefront when it comes to standardization. But at the same time, you need that infrastructure, which is not just resilient, which is super important, especially in today's times, but also trusted. And that's when we can enable transactions efficiently. And then when you combine these common data standards with the trusted digital identity, that's when we start then getting into that trust layer where we are creating that foundation of trust for that connected global ecosystem. And again, that's where we can start looking at how trade can become a lot more autonomous and STP rather than just purely digitized.
I agree with you. The three components are so important. And that's why also it's so complicated, because you need the three components to move together or not in parallel, but together towards a common objective. So our usual signature segment of the Trust Talk, of Trust Talk, what's the one thing you want listeners to remember about what we've discussed about how interoperability and trusted identity can transform global trade?
I would say that digital trade doesn't scale through digitization alone. It only scales when trust, data, and value can move across networks as seamlessly as goods move across borders.
Perfect. Portability of assets, portability of identity. So important, and trust. So important for anything to happen in an efficient way. Thank you so much for this conversation. I enjoyed it greatly. I hope our audience also did, and I'm sure they did. So thank you again, and looking forward to seeing you in Singapore or elsewhere in the world.
Thank you, Alex. It was a pleasure being here, and I really enjoyed our conversation. Thank you once again.